Yes, I think if you look at the yen nominal effective exchange rate, it has risen quite substantially over the last 9 months, but it remains at relatively low levels compared to the last intervention back in 2011. So what is crucial then is whether the slide in dollar yen is disorderly. So if you look at realized volatility, we look at a 1-week tenor, it has risen but remains relatively low. And therefore, the bar or the hurdle for the Ministry of Finance to intervene in the currency market is higher, which means that it's less likely that they will intervene. With regards to 105 or 100 level, I guess it's all about the support levels. So there is a crucial support level at around 105 and 100.
And that's really critical, isn't it, to highlight that. It's not necessarily about the absolute number, it's about the rate of decline in dollar yen, and so far it hasn't been disorderly, and the implied vols are telling us that. Dollar, short-term weakness, is it going to persist, and where do you see the Fed going this year?
Well, I think if you look at since Fed Yellen's speech on the 29th of March, the dollar has continued to be on the weak side. If you look at what the Fed Fund futures are pricing in, prior to the 29th March Fed Yellen speech, they were looking at around more than 70% probability that the Fed will move this year. And now it has come down to about 50%. Our view is that it's more likely that the Fed would not raise interest rate this year, given concerns about the foreign growth.
So they're going to be on hold for the duration of this year?
For 2016. If there is any probability, it's more likely that they will raise one time rather than to cut rates this year.
It's interesting. The June meeting, I think, is going to be very critical. The Fed has made it very clear that they are watching international developments. June coincides with the Brexit vote on the 23rd. If we do see volatility spill over beyond Europe into the global markets, they're not going to go in June, are they?
Exactly. So I think up to June, there are still a lot of risk events globally. And I think that US GDP is still unlikely to improve materially until the second half. So it's quite unlikely that they move in June.
Have we seen the worst of the volatility for sterling in the run-up to the June vote, or is it going to get even more choppy? What's your downside target for cable?
Yeah, our base case is no BRIC exit. So in that event, sterling ahead of the referendum is still likely to head lower towards 135 than towards 140. In the event of a BRIC exit, then potentially sterling could head towards 120.
Okay. Quick line from you, Roy, on China, because the weaker dollar right now is giving Beijing some cover to stabilise and push the currency, the yuan, higher. Are they going to continue? I mean, a lot depends on the Fed and the trajectory of the greenback, but depreciation pressure remains on the yuan, yes? Because of the macro environment.
Yes. I think if you look at FX reserves and I think the capital outflows, basically the whole situation have improved in recent months. I agree that because of a slightly more cautious Fed, it is in the benefit of China. If you look at the yuan against its trade-weighted basket, it has declined by more than 3% this year. So that gives them the opportunity to slowly allow a weaker yuan against its basket of currency.